Hey guys, what's up? This is Andrew for TrendSenses.com. So I have a big announcement to make today, guys. I'm gonna be live tomorrow, 6 p.m. Pacific time on Jackson Hunter's YouTube channel. You can find the link in the description of this video. I'm sure you know this guy. He's making amazing content about AMC and GME. So if you have not subscribed to his channel yet, please do it now. And please come tomorrow, 6 p.m. Pacific time to watch this live stream with him. I want you guys to like, comment, and give this amazing dude the greetings he deserves. And thank you so much to Paula that helped to organize this meeting. You are the best. So today I want to make an analysis about AMC. As usual, I'm more going to be focused on the short term because tomorrow we're going to discuss, so AMC, GME, we're going to discuss the targets, we're going to discuss what can happen if there is a squeeze, how likely is the squeeze to happen, everything. So today, once again, I'm going to more focus on the short term. So let's get into it. And yes, so very quickly, I just remind you my target that is unchanged. Once again, we're going to discuss this tomorrow on Jackson Hunter's YouTube channel. But as you guys know, I apply fibs. So first wave, second wave, third wave, fourth waves, I apply fibs. I use ELLIOTT wave theory that says that usually when the fifth wave is extended in this situation, it's equal to 1.618 times 1 plus 3. So here it would give us a target around 140 and 35, 30. It depends where you start the first wave, but it's not going to change much. The area is around 130. So we're going to discuss once again how likely is this to happen and if it can go higher. The answer is of course yes, but we're going to see that tomorrow. So here, let me make the analysis about what is going to happen in the short term. So we had this breakout, all right, the same way we had the one before. That was the end of the second corrective wave, and this, for the same reasons, this breakout is for me the signal that the fourth corrective wave, that is coming from 73 down to 28, 29, is over as well. So from there, we can expect a 5 waves move on the upside. So what did we have for now? We had, to me, what looks to be a first wave. I can break down this wave into 5 waves as well, 1, 2, 3, 4, and 5. And you can see that here we have this bearish divergence at the end of the fifth wave that is signaling that the market is out of steam, that the highs are not as powerful as they used to be just before. So this is a weak signal that got followed by a correction. So let's analyze this correction and let's see what information we can get from it. First, let's see how deep this correction was. So to do that, I use fib retracements, and you can see, bam, that we went roughly to the 61.8%, so 37.7, 38 retracement of the first wave. So once again, if we have a look at the book, second waves usually are equal to 0.618 times the first wave. So it looks for me like a typical correction. What I didn't really like about this correction, and I told you guys this, was that, fibs give you areas. Okay, but the real support and resistance levels are actually defined by trend lines. And here you can see that the bottom of the fourth, which is a typical area of correction for the second wave, is at 40. So I didn't like this. Okay, this is what we can call a fake out. All right, this got probably many traders out of this trade, and this is maybe the purpose of those trading algorithm that are running, and I just try to push some investors to the edge and make them just close their position at the worst time. So I'm sure that apes hold, but as you guys know, there are many investors implied in the AMC trade, and I'm pretty sure that those algorithms, they know what they do. And here, this breakout was to me not nice, but it's what we can consider as some excess. It happens, all right? We didn't stay there long. You can see on the daily time frame, we had one close below, and then we immediately the day after closed above. So we never had the confirmation of this breakout. The confirmation is whenever you have 2 consecutive candles that are closing below the level. This didn't happen. It's still a fake out to me. Let's go back on the 4 hour time frame. So here, what are we looking for, guys? We are looking for the end of this second wave. In the same way here, the second wave finished here. So it's not as clean as it is here. I mean, you can see that everything is bigger, All right, so this might be good news as well. It might take maybe more time. This move took like roughly 1 month, so maybe we're gonna take 2 or 3 months, but we already started with, you can see what seems to be a very long first wave. So this is rather good news, I would say, and we are waiting for the short-term breakout, guys. Okay, this would be for me the signal that the second corrective wave is over. So we are waiting for something like this. Okay, bam, bam, and bam. Okay, this is a typical breakout situation. So breakout, retest, and then we go higher, just like we did here. But you can see that sometimes the breakout is not retested. Here we just moved higher and it never came back. So let's see how this happens here. It's going to depend a lot as well on the global market. As you guys know, we are still in an uncertain situation. We don't know if everyone is going to default or not. We don't know the impact this could have on margin requirements that hedge funds are facing to hold their short positions. So this can create some troubles in the market. I don't know which way it would go, but that's why I'm monitoring those kind of short-term signals that are going to be helping us to find what the market is likely to do. So this is what we're looking for. And if this happens, once again, we're going to discuss this tomorrow on Jackson Hunter's YouTube channel. But what we're going to be really looking at is how high this third wave might go, because the higher it goes, then we're going to apply the same method. All right. As usual, guys, you know that we measure from 1 to 3. So let's say the third wave only goes to 73. And then the fourth corrective waves goes back to 55, something like this. Then it's going to give us a fifth wave target at 125 roughly. So same area. But if the third wave goes much higher and the fourth wave corrects less, which is going to be making sense to me, something like this, for example, then the target would be different. So for now, I'm not changing my target. Then we could reach maybe 240. And if there is a real squeeze, we're going to once again discuss this tomorrow. So I'm not going to give you here all the different scenarios, but it might as well go higher. So let's see what is the highest target we could have for a squeeze. Tomorrow I'm going to give that answer. Of course, it's only my view, but I think that it's interesting to look at what happened in the past and just assume the same things might happen again. So that's it for the technical analysis. Now let's check what is the synthetic short interest. So once again, guys, for those who don't know this spreadsheet, I'm here retrieving all the option open interest from the market. All right, so I'm having all the maturities. 1st of October, 15th of October, so on and so forth until Jan 23. I take all the options, I compute the delta. Okay, so the delta is just Black-Scholes formula, as you can see here, guys. So you can find it on the internet if you want to do it yourself. You need the volatility though, so it's not easy. I get it from Bloomberg. So if you guys have a way to find the volatility, you can do it as well. Otherwise, it's going to be complicated to get the synthetic short exposure, but you can still have the number of shares, which is very interesting. Okay, which is the yellow curve here. This one is the number of shares. So you can see that we have a huge concentration around the 135 strike, which is totally unusual, as you guys know, for the option market that is usually concentrated around the money. So this is what is creating the gamma. This is what is going to create some bullish momentum if we start to move higher. So we can see where this gamma is coming from. So of course, 135. But we also have some big exposure on the 40 strike and the 60, 70 strike as well. So let's see where this is coming from, because the shorter the maturity, the more explosive it can be. So I'm looking here for the greens as usual. So Jan 22, we have the big one. Here we have a big one as well. And in October, we have some big ones. So here, those two are going to create a lot of trouble. So it's like very short-term maturity. You can see 1st of October. Ooh, this one is going to create a lot of trouble as well. So let me give you an example. For example, on the 1st of October maturity, we have 14,000 options on the 70 strike. Okay. The delta is 4% at the moment. So if AMC goes higher, so let's say, I don't know, goes to 160, look at the delta. It goes from 4% to, of course, 100%. Okay. So it means that market makers and the synthetic short exposure goes from 6 to 14. So it means that market makers needs to buy roughly 10% of the share float on that day, which is the reason for a squeeze to happen, which is creating this bullish momentum. So we still have everything on the option market that is going to create this strong moves up if we start to move higher. But once again, we need to reach some levels for these mechanisms to start being at play. So here, once again, the 40 strike, you know, you can see, so 20 is not going to give us gamma. And here the 40 strike is mostly coming from Jan 22. So the delta is already 66%. So this is not creating gamma. Okay. So we don't have that much gamma around the 40 strike, but we have gamma around the 50 strike and the 70 strike. So, and so here you can see, bam, bam. So those are short maturities, and it's like high strikes that have a small delta, 18%, 14%, and 4%. And this is the reason for market makers to buy a lot of shares on the move up. So once again, it starts at 50. So AMC needs to go close to 50 or above 50 to start having those strong moves up. So in terms of charts, it's like roughly close to the highest level we had in the past month. So it can happen very quickly. So maybe the third wave is going to start this week. Once again, I'm going to monitor that. I'm going to let you know, guys, everything that happens, that I see, and let's find out what's going to happen. So that's it for me. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.